with chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group, for full-service financial advisory based out of Dover, Delaware, serving clients all across the country. You can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, January 31st, 2025. Can you believe we're 1 month down already in 2025? A little disclaimer, I am traveling next couple of weeks. So if I sound a little funny, a little echo, some background noises, I do apologize. Let's go ahead and jump into the numbers. It was a roller coaster ride of a week this week. Dow Jones up 0.2%. It was positive, but the other ones, not so much. S&P 500 down 1% on the week. NASDAQ Composite down 1.6% on the week. And the Russell Small Cap Index down 0.8%. So all the major indices outside of the Dow Jones down quite a bit this week. The Volatility Index, as you might expect, bounced up quite a bit, up 10.6% on the week, but still at a really tame level, 16.4 on the VIX. I think that can go a lot higher. Just keep that in mind. The long-term bonds, as measured by the TLT, those are 20-year treasuries, up 0.5% this week, up 0.6 actually. So a little bit of money going into those, a little safety seeking there by some of the market participants. And then when you look at the sectors, it was a mixed bag with a lot of focus on defensives. Outside of utilities, defensives did really well this week. So things like staples up 1.4%, things that you need, right? Food and soap and shampoo, stuff like that. Financials up 1.2%. Healthcare up 1.7%. So some positives on those defensives. But I tell you what, technology got just crushed this week, down 3.5%. And that was driven by semiconductors, particularly down 6.8% on the week. And utilities, which are normally defensive, they were also down 2% this week. And listen, those were caused by the same story. I'll get to it in a minute. Let me finish up some numbers. I'll circle back around and tell you why that happened. Other bright spot, communication services, that was up about 1.9%. You can thank Facebook for that. Gold was up 1.1% this week and silver up 2.1%. And gold is breaking out. I mentioned this a couple weeks ago, that gold looked like it was about to break out. And if it did, it was probably going higher. And it has, and it is. I mean, it's up 6.7% year to date. Now, we have a gold mining company in our models because gold miners, I like working with miners because you're getting dividends and you also get an outsized move versus the metal. So usually 2 to 4 times the move of the metal. We've got Kinross Gold in our models. So gold's up 6.7% on the year. Kinross is up 21.6% year to date. Yes, that's right. Year to date, January 1st to today. So gold making a move here. And I think that's got legs. I think gold can continue to go higher moving forward. All right. So what's moving markets this week? It was a multitude of things. First of all, earnings have been happening. Okay. That's been happening throughout. We're right in the middle of earnings season. This was a huge week for earnings and companies reflected that. Big moves up, big moves down. Overall, earnings have been good. They've been underperforming their 5 and 10-year averages, but they have been good. Okay. So earnings have not been bad. It's not been a bad earnings season, but it has been varied and not quite as strong as it has been in times past. So earnings have been going throughout the week, and that's been driving markets. But here's the big stories that drove markets this week. The first one, I'm not sure if I talked about it last Friday on the podcast. If I didn't, I meant to. I really did mean to do this. I sent an email to my colleague, Daniel, there at the office about this story last Friday. DeepSeek, okay, that is an artificial intelligence company out of China. They released a report that demonstrated the data shows that they can do an incredible amount with their artificial intelligence, their AI, with far less computing power, much less chip power in the form of NVIDIA, much cheaper, much more cost effective, much less in the way of chips. So that was the story that really started the market off in a crazy way on Monday, really shaking things up, because although I had saw it last Friday, it really just came to full fruition and people really kind of got the full brunt of it and grasp of it on Monday, and the market reacted big time. NVIDIA itself, NVIDIA, the biggest chip company in the world, the one that's driving all this artificial intelligence, it was down 16% this week. 16%. Got clobbered on this news. Now, we don't own NVIDIA. And the reason why we don't own it right now, it's a great company, don't get me wrong. But listen, they're right at the very tip top of the food chain here. And I've heard multiple companies, Microsoft, Amazon, Google, right? They're all talking about wanting to make their own chips because they don't want to be paying the amount of money they're paying to buy NVIDIA chips. Well, then you get the story that comes out that says, hey, you don't even need those chips. There's AI that can do these jobs and do it faster, better, with less chip power. And that really just sent NVIDIA down and down hard. Now, as the week unfolded, I did some more digging and I've seen that this DeepSeek out of China, this AI, can't do the things that NVIDIA can do, right? You don't have spatial recognition and all these other types of things. So maybe the story's a little bit overblown, but it's still an issue. This is a budding technology. It's a budding industry, and there's going to be a lot of changes and a lot of competition. And NVIDIA is just priced to perfection. So we've been shying away from that. We do have AMD, which does some AI, but they're much more diverse than NVIDIA at the moment. I really like Lisa Su. She's very sharp CEO. And I actually took the weakness on this space this week to buy some more AMD for everybody. So everyone that's got AMD in their models, we picked up some more shares this week because I just thought that this story provided an opportunity because AMD was down about 5% just on the coattails of the whole space. So I thought it was a good opportunity to buy some more. So that was one story. And that seemed to calm down a little bit as we moved into the week. The next story was Fed Chair Jay Powell and company. The Fed had their meeting this week. And as expected, we talked about this last Friday. We said, look, we don't think the Fed's going to cut rates anymore. We think they're done. We think they're going to stop and pause. Well, that's exactly what happened. They had their meeting. They announced no cuts, and they made the statement that they're concerned about inflation. And the market went into a tailspin on that news. Now, it did recover, but the initial move was a big move down. A lot of that's algorithms and computers jumping in and trading that. And it did finish down, but it did recover some of the major losses on the outset. But that is a story that continues to stay with us. Inflation's not dead yet, folks. That dragon hasn't been fully slain. And the Fed's aware of that, and they have paused their rate cuts, and the market doesn't like that. The third story, and the biggest one, if you will, is one that we talked about last Friday. I mentioned on the last week's podcast that on President Trump's inauguration day, I was watching the press conference that evening at the White House while he was signing executive orders. He was doing an impromptu press conference. And during that conference, he mentioned 25% tariffs on Canada and Mexico beginning February 1st. He just kind of threw it out there. And when he did, the stock market futures, as I was watching him and watching the futures at the same time, I wanted to see what things he said moved the markets. Well, when he said that, the stock market futures collapsed. I mean, they just tanked big time, like dropping a stone from a top of a building. It caught my attention, let me tell you. Now, they did recover and things settled down, but I thought that was a sneak peek into what might happen if this came to fruition. Well, today, on Friday, the market started off great. We've had good earnings, as I mentioned, for the most part. We had a good inflation number this morning, the PCE, the personal consumption expenditures number. That's the one the Fed pays the most attention to. And remember, they just said on Wednesday they're concerned about inflation. Well, the number today was better than expected. It's still sticky, but it's just a touch better than expected. So the market came out of the gate today just ripping, man, just doing great. It was up quite a bit, pushing, almost up 1% on the day. The market was doing quite well. Later on this afternoon, the announcement came out. 25% tariffs on Canada and Mexico. The entire market rolled over. And what had been up almost 1% finished down 0.5% or so on the day. So the market rolled over in a major way today on that news and finished lower. Again, not a surprise, but that's what happened. So what happens moving forward? Well, I've been talking the last couple of weeks that the indicators that we follow look like the market's overextended. It looks expensive. I think we need to have a little bit bigger of a correction. It looked like it had started, then things turned back around, went higher. But the charts look a little bit sloppy here, a little bit broken here. I think on the intermediate term, the market probably goes lower. And therefore, we're still sitting on some cash and we're ready to do some more buying. And if the market does provide us those opportunities, the market goes lower, we're going to jump in and buy. I mentioned earlier today, not only were semiconductors down because of that DeepSeek, but utilities were as well, down 2%. Because if you don't need all this heavy duty computing power, you don't need the electricity to make that happen. So they were down a bit this week as well. There's one I'm watching pretty closely. If it gets a little bit lower, I might try to jump in and buy that. We also did some buying for new clients. We bought IBM before they announced their earnings this week for folks that are new and are in that particular model. I mentioned we added to AMD for everyone that has it in their model. So we did some buying on the weakness that we saw throughout the week, but there's more to do. And we're just going to wait for the market to kind of unfold and go lower and jump in and take advantage of that. So that's what I've got for you this week. We're kind of crazy, right? All over the place. A lot of stuff moving markets. And I think there's more to come. But overall, economy's holding in there. The GDP number is a little bit light, 2.3% economic growth, lighter than the market expected, but still positive. 2.5% still good. So we'll keep on watching things and see how things play out from here. So between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money, maybe take that big trip, buy that second home, buy that first home, retire a little early. Now, you know what your goals are. Don't just think about it. Think big. Think BIG. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.